Welcome back. You're watching Power Breakfast on CNBC TV 18. Yesterday on the Lal Street, we witnessed a smart recovery in the second half, near 200 points from the lows for the Nifty. The Sensex and the Nifty, on the back of that, ended with a gain of about 0.5%. The mid-caps, though underperformed, ended flat with a slight negative bias, but still saw a recovery of almost 350 points from the close. The bank Nifty just shy of the 27,000 mark. With that, we went home and overnight the biggest rally on the Dow Jones ever. Ekta joins us with all the cues we have to work with this morning. Morning, Ekta.
Morning, Manglam. Well, maybe we saw some of that coming, you know, the global rally, the risk on that the US markets were going to present. Maybe the Indian markets had some amount of that, of an inkling in yesterday's trading session itself. So like you mentioned, it was a very smart recovery for us. The Indian equities really shrugged off all the global weakness that we saw. So the Nifty was up 195 points from the low, Sensex was up over 600 points from the low, and the mid-cap index was up 2% from the lows. Advanced decline ratio recovered very significantly in yesterday's trading session, and yesterday the FII's net bought around 80 odd crores in the cash market. I think you know, the gross figures were around 1700 odd crores, just giving you an indication in terms of the kind of participation and the low volumes that we're seeing in our market. You know, Jeff Chaudhary, yesterday we were talking to him on Markets Today, and he said all the big bosses are out right now, so no big bosses there in the institutional desk to make the big decisions as of now. So all these decisions or all the trading that you're seeing is on very low volumes. So the DII's net sold around 138 odd crores in the cash market. Again, the gross figures were very low on that front. The rupee managed to close stronger, 70.07. Bond yield was at 7.26. So today the big cue would obviously be the global risk on and the rally that we saw, as well as the December expiry. So the Nifty is down around 1% in the December series at current reckoning. The mid-cap index recovered to a gain of around 1% as of yesterday. As of yesterday, the global growth fears, Trump tweeting, that really gripped the global markets. But if you see what happened today, the US markets saw their best percentage gains we've seen since March 2009. I think the best point gain that we've seen ever for the US markets. Asia's higher on account of this risk on. And the SGX is indicating that it's going to be a positive start for us as well, around 30 points higher, 23 odd points higher for the SGX. Crude is providing a macro cushion for India, but yesterday obviously we saw that bounce off from 17-month lows because of the kind of risk on that we saw. But nonetheless, crude is still at a good sustainable level for us. So Brent is at around $54 per barrel. As long as it doesn't go to any sort of dynamic, unreasonable level, I think you know, the macro cushion will continue to sustain for us, and that sort of premium will probably cushion us in terms of lower crude prices. Now, obviously, we can expect that risk on to take us through higher levels in today's trading session. What I'd be watching out for in terms of some levels would be the 50-day moving average of 10,578, though we zoomed past that yesterday. Intraday low of 10,534 yesterday, considering we bounced back from that. So if we eventually go back lower, and recent highs of 10,782, which I think should be probably on the cards in today's trading session. In terms of news, RBI has constituted an expert committee on the economic capital framework. Won't have a direct implication on the market, but I think the market would probably take note in terms of what the eventual decision would be on the RBI capital reserves.
Okay, Ekta, so those were the broad macro cues. SGX Nifty suggesting an uptick of around 60 points from yesterday's close. But in terms of the micros, what are the stocks that you're watching out for?
Well, yes, not many stocks to talk about, considering, you know, the kind of participation we have. So NBFCs, ASSOCHAM has, you know, spoken to the Prime Minister, and they've said stringent regulations on NBFCs and housing finance companies is affecting flexibility. So maybe there could be some amount of movement on NBFCs in hopes that there could be something that could come out. In terms of the changes in the e-commerce FDI policy, there was a lot of brickbat, you know, from the e-commerce players with regards to that. It's only B2B, but maybe there could be some amount of a sentimental impact that we could see on a couple of companies that have e-commerce ventures. HUL, they've said that the NAA order is consistent with HUL's stand and action, so maybe we could see some amount of a movement on that one. Titagar Wagon proposes to sell 5.64% held in Simco via OFS. And lastly, Sun Pharma is in focus. Expect green on the stock. Dusa Pharma, their subsidiaries, been awarded a preliminary injunctive relief prohibiting a pharma company from using its trade secrets in the US.
Right, Ekta, thanks a lot for that. With that, it's time to slip into a short break. Come back and we talk about the RBI forming an expert panel to review the economic capital framework. More on that when we return.